Hi, good afternoon. Welcome, everybody. Thanks very much for another Property Thursday. Thanks, everybody, for joining. This week is Global Residential. You all know Paul Preston. We've done quite a few of these before. So welcome, Paul. Thank you.
Thank you very much, Chris. Great to be here.
And a new face, Greg Stockton. Well, I say a new face, but everyone seems to know him. So, Greg, welcome to Global Residential. Welcome to Holborn. Welcome to the show, and it is a show. And today we're going to be talking about Slough. And if you don't mind, I want to touch on previous success stories that Global Residential have had and what's coming up. But the most important thing today is to talk about Slough. So I think, Greg, up to you.
Perfect. Thanks for the intro, Chris. And yeah, nice to be here and talking about an exciting product, and hopefully clients and staff alike take enjoyment from what we're going to talk about today. I thought it was worthwhile just giving a little bit of background and a little bit more meat to the bone of who Global Residential are. I know the IFA space very well, so I'm sure last time they've heard of us, we've had probably another 10 or 15 advisors join the group. So worthwhile just doing a little bit of an overview. But Global Residential was established in 2020 by Paul Preston, who's obviously on the call right now. Paul had a hugely successful career in global sales. It's another international property company. I won't steal his thunder. He can probably explain that in a little bit more detail. But currently to date, £750 million worth of total transactions, and obviously supporting 80 nationalities worldwide, which obviously when we're dealing with a company like Holborn, we know how global you guys are in terms of location of advisors. Obviously, the fact that we have already serviced 80 nationalities globally should demonstrate and prove the ability to get deals through. We've got offices in Manchester and Dubai. We have our own lettings and management company run by a lady called Pardeep out of the UK, and full back office support through our UK team headed up by a lady called Sharon Barlow. I'm just going to hand over to Paul very quickly just to go through a little bit more on the sales support and that back office, as he's based in Manchester most of his time with that team, and he can probably just provide a little bit more meat to the bone there. So Paul, I'll just pass this over to you now.
Yeah, thanks, Greg. Yeah, it's just obviously been doing this for a long time. I think the differentiator very often is the support function that you put in place, client journey, speeding things up, exchanges, and just keeping people well informed. And I think where I've seen other property companies go wrong in the past is focus too heavily on the sale, of getting the sale done, and then no client journey thereafter. So we're pretty much a one-stop solution. We've got the mortgage business, obviously the sales business, and then we've got the lettings on the back end. So for us, it's about making property, obviously, as an investment standpoint, interesting to people, so it performs well. We look at locations which we feel will outperform others. But I think just keeping people well informed and having that slick back office as we have, keeping people well informed, keeping people updated of good news and bad is really important. So a lot of my time is focused on that back end, on the process, on the client journey, and hopefully then it makes the life easy for the sales guys to focus on what they're good at, which is getting in front of clients and helping them make the right decision when it comes to property investment. So very proud of what we've done so far. Thank you, Holborn, for your support, and yeah, got some great product coming up as well as this Slough one. So looking forward to the future.
Paul, there's something that sticks out to me because, as you know, my background is mortgages, and on the third one there, mortgages, and that is at the moment so important with what's going on in the market, but also with you guys making sure that we have the right companies, the right providers ready and available, whether it be Slough or whether it be Greenwich or whether it be Preston, wherever it may be. Can you just touch a bit more on what you're seeing on the mortgage side?
Well, we've obviously seen a lot of hikes in interest rates, and let's hope that there's not too many more of them this year. But the reality is that interest rates are where they are. And I think that if you bought a property 10 years ago and you're now feeling the effects of interest rates, then it's tough because everyone's purse strings have been tightened with the cost of living as an example. But if you're going into a new property transaction now, you know where the interest rates are. So you've got to make sure that you find the right opportunity, which is a blend of a strong yield in a good market where you potentially can see some significant capital growth over the next 5 to 10 years. So mortgages have definitely slowed things down for a lot of people, but it's all about the property itself. And what we're going to show you now is London commuter, great value, one bed starting at just less than £260,000. And, within 15, 18 minutes, you're into Paddington, central London. So Yeah, there's some great opportunities out there, but the lending market has got a lot tighter, obviously, and interest rates, they are where they are. But that shouldn't stop people looking seriously about investment. They've just got to make sure that the income, i.e. the yield, offsets the higher cost of borrowing. I think that's really important.
And the other thing is, of course, you've already looked at providers and they've actually had a look at Slough and they've made sure that it ticks the boxes for them.
Yeah, the developer was really open. I mean, it's a household brand, SevenCapital, and a lot of people within the international property space have got a lot of SevenCapital stock. So when we first sat with them, they were very open, and it wasn't about can we get the unit sold, because we know we can at that ticket price. It's great value for commuter London. It was more about they were very conscious of the lending, which is great as a developer, because developer wants sales. But these guys wanted to do things the right way, which again was a real breath of fresh air for us. So we went out there. We secured over 100% in terms of lending, so 40 units. We had lenders willing to lend over double that. So it's important that, we know where our client audience is, and it's global. So, if you've got a client in the UK, it can be a lot easier to get finance than somewhere in, a different location around the world. But because of our footprint and our stance, we make sure we've got a mortgage product regardless of where the clients are. So we went out, we had a full panel of lenders based on lending in Africa, lending in the Middle East, lending in mainland China. We've covered all the areas that we've got a full book of lenders willing to lend on this project. Obviously, it comes down to individual circumstances, but we've gone out there, we've done the full report, the lenders are onboarded, and I think that's really de-risked now. I know it's a completed product, but again, we don't want clients to waste time. So having that lending there and nailed on is obviously really important for us, because again, it just helps that overall process and the smoothness of the transaction.
Thanks, Paul. Next slide.
Yeah, so Chris, I feel this is a really important one for us to be going through now, for a number of reasons. I mean, obviously, as we've just discussed, mortgage rates are, at the sort of tip of everyone's tongue in terms of question. So it's that constant debate of, do a buy-off plan now and sort of kick the mortgage conversation down the road a couple of years, or do I look at something that's completed now? And, you do have a lot of global clients sat on cash. They want their money working for them. So a completed development would obviously make sense to start generating yield straight away. I guess the biggest concern I have personally from a sales perspective is when people are looking at completed, they're looking at the UK right now and they're going, well, there's potentially a lot of value. There's potential, some, price points coming off, what's on the market right now. But I still think you've got to be so careful when buying completed developments as well. How old is that unit that you're purchasing? Have you done the right research and sort of DD to make sure there's no sort of scaries when you take ownership of the apartment? So buying a completed development, I think, makes sense, but making sure it's newly completed, I think, is probably the key fundamental factor when buying on the completed side. So just a couple of those completed benefits there. As Paul's already said, the ability to lock your mortgage in immediately. And again, you might go, well, why would I want to lock it in at such a high rate? Well, as long as your rate is covering your mortgage and you're still getting yield out of it, that's okay. Some people just prefer to know where they're at from a cash flow perspective on day one, as opposed to, okay, I'll kick it down the road and I'll hope and pray that in 12 months' time or 18 months' time, it's better than it is now. Because then if it's not, you might have a problem. So just the ability to lock that in now. As I've already said, starting generating yield immediately. We've got no developer risk with a completed development, obviously, which again, with rising inflation and interest rates, there is always that question mark of, can developers swallow that extra pressure? Are we going to end up with some developers, sort of holding the can there with uncompleted developments? I think personally, completed developments tend to be emotionally just an easier purchase, especially when you're already buying from thousands of miles away, to know that your building is already complete. There's already a tenant living inside it and already paying rentals. And again, when we look at the sort of newly completed, which is typically an off-plan benefit, but more energy efficient. If we've got something that's newly completed, typically it's more energy efficient. People are more concerned now about energy prices. And then the other one is the warranties that are left on the property. So again, just back to my original point, if you've got somebody that's looking for value, but buying a completed unit that's 10, 15, 20 years old just because it looks good on Rightmove or Zoopla, it's probably not got any of its warranties left. You don't know what you're inheriting. So again, buying a newly completed unit means that you've still got warranties left on the property, which again makes it easier to get mortgages, as Paul's already said, and just generally is a better proposition for people. Yeah.
We get a lot at the moment, a lot of inquiries for completed property. And do you know what I think it is? You're going to get what it says on the can. When you look at the cash flow, the purchase price is going to be there. Your mortgage is going to be on there. Your rental is going to be on there. Your costs are going to be on there. There's going to be no surprises. And I'm not against off-plan, don't get me wrong. But if somebody is looking at a cash flow, and they want to know, right, I want to make sure this is going to wash its face. I want to know the rent is going to cover the mortgage and the costs. And it's the investment. It's all about the investment. It's all about the capital growth. So that's why I think it's such a great way of looking at buying a property at the moment, Greg.
Yeah, I 100% agree. And especially, again, from a cash buyer perspective, you know, if you've got people sat on cash right now, they can go and they can get some good value. They've got tenants in there. They're just going to get the money working for them straight away. And get that potential upside of capital. I guess obviously the downside of buying completed is you might already have had, you know, 18 months or 2 years worth of growth within that development as opposed to buying off plan. But I think a lot of people will take that as a sort of trade-off for comfort to know that it's already done, developed, and there's a tenant there ready to go, right?
Well, the other thing, of course, is that got a webinar, Crown View in Manchester, which is off plan. So we're covering our bets here, aren't we, Greg?
You know, at the end of the day, I'd say there's probably, Paul might correct me if I'm wrong, I'd still say there's a larger percentage of the market that likes buying off plan because of the value, as long as you can get a really good, strong developer attached to it. But we'd be pretty crazy as a property provider not to take good quality stock for those, you know, that 30% that does want the completed and they want to nail it down. So yeah, look, we are covering all bases, but we're making sure we're doing it with quality products and quality developers.
Just put an ad in here for Holborn, for anybody that knows. All of the projects that we have on our website are DD'd thoroughly. Pete Wesley, who's the managing director of Holborn Property, goes and visits every single site. And I know that, well, how can I put this? He wasn't exactly excited about going to Slough, but when he phoned me straight afterwards, he was blown away. So maybe let's get on to the next slide and find out more about the home of the office.
Yeah, he was actually. He called me as well. It was sort of 8 o'clock. I think they had a full day trip traveling all around the UK, seeing various sites. But yeah, he loved it. And it was just, you know, it was great to get that feedback as well. To me, it's such a great value proposition. This, I've not seen, you know, London prices. This is commuter London, but to be within less than 20 minutes into, you know, Paddington on the new Elizabeth line, that takes you to all of the locations as well, Greenwich, Stratford, etc. To be this close to London, one bed's less than £260,000, fully tenanted. You know, to me, there's just great value there. I've not seen these sort of opportunities for a long time. So, you know, definitely value to be had. And again, the security, the fact that it is tenanted, it's income generating and it's built.
Greg decided to mess around with his screen then. So, we're back. Thanks, Greg. All right. Okay. New Eton House. Yeah, that's okay. It's live.
Technology's never been my strong point, mate.
Nor mine. That's why I don't touch the computer during this.
But yeah, like Paul said, I think it's worthwhile just going through really some of the basics of why New Eton House, why Slough, and just really demonstrating that proposition. And obviously, you've got questions as we go through this. Just feel free. But look, I think in terms of location to what's local to the development itself, we've got to bear in mind this project is only 5 minutes from the Slough trading estate, which I think you just made reference to the office there a couple of minutes ago. But it is the largest trading estate under single ownership in Europe. And if you look at some of the huge organisations that are based in this trading estate, you can very, very clearly see why it would attract a very, very good, strong tenant profile, which whenever you're buying property from overseas, you know, your tenant profile is absolutely key. There's some great value across the UK, but your tenant profile isn't necessarily always there. So making sure you're in an area which has got good quality organisations and corporates around it is absolutely key. Also, Slough recognised as one of the top UK cities for startups over the last 5 years. Again, that's, I think, driven by that sort of young entrepreneur and sort of the talent that has been attracted into that specific area. And is home to over 92,000 jobs across 5,400 businesses. So not only your tenant profile going to be really, really good, but it's also going to be very sticky as well. So if you're the type of client that's going to buy and look at that long-term letting, it means you're going to have very few void periods where you're not having a tenant in the property. But also if you're somebody that's looking to buy and look at accessing the short-term letting market, obviously you've got a lot of corporates there that are going to have guests coming into the city and the town on a regular basis, making that short-term letting opportunity a pretty big one.
Yeah, I know Slough. I used to drive through Slough. Beautiful, beautiful. I mean, it's so near Windsor as well. I mean, maybe Slough's not that beautiful, but Windsor certainly is.
Well, that interestingly brings me on to the next slide, Chris. So that was quite a good tee up there, mate. I've
done this before. I know what I'm doing.
In terms of location, but look, you sort of cast your eyes down to the bottom there. 48,000 workers living in Slough are commuting from the town to major cities like the capital. That's absolutely huge, and obviously it's made easier now by the sort of Crossrail and other sort of expansions to train lines. But you can pretty much get from Slough now into Paddington in just under 20 minutes, which is huge. Windsor, you've just mentioned, you can drive in 10 minutes. Windsor Castle 15 minutes, and the Slough Trading Estate, as we've already said, just under 5 minutes. So from a location perspective, the property itself sits in an absolutely perfect spot, whether you're trying to rent out your property to somebody living and working within Slough, or whether you're trying to rent it to somebody living and working and doing the commute to London.
It's really good as well, Greg, that you've referenced Chris's school on that map as well. So that's really useful.
Yeah, so, I was at Eton. I went to Eton. I drove through it anyway. Yeah.
And just on that, on a serious note, what we've seen in the rents over the last couple of years, everyone's well aware that the rental market's so buoyant in the UK. One thing that always sticks out in a rental market, especially one as so strong as what we've seen in the UK, with probably over the last 2 years, some rents would have been up sort of almost 25% combined over that 2-year period. And again, in line with the pressure on cost of living, even more so now, people are looking for value. And if you can be in, central London less than 20 minutes, but you're paying, half of the rent that you would as if you was in central London, then, probably you're going to do that because you've got more spare cash, there's less strain, less pressure. So these kind of commuter hubs are really important at the minute, just because London's accessible very quickly. There's a lot going on in Slough, Windsor, etc., but it's more affordable. And we're seeing that a lot. And I think that trend will continue as if the rental market carries on the way it is. And let's face it, if sales within property does ever slow down for whatever reason, that rental market is going to carry on getting stronger and stronger and stronger, which we've seen over the last couple of years. So I think affordability, commute bouts such as this are really going to come to the fore over the midterm, is my view.
And I've also got to add, with working with Holborn, this is dead in the middle of our sweet spot. I know we've got properties. You've got Greenwich at 800,000. We've got properties you've got, haven't you, in Bolton, 104,000. This is our sweet spot, and I think that's what will attract people, to be that close to London, Windsor, my old school, and to be at that price point. I think it's great. With mortgages at 65% loan to value, subject to status. It's anyway. Sorry, Greg, did I interrupt?
No, you didn't interrupt, Chris. You make a very good point. I mean, I was back in the UK this weekend, and I met up with 4 of my friends in London who are all just about to come off fixed rate mortgages, and every single one of them is selling up to move to a commuter belt. Because, as I've put there on the price, compared to an average price point in London of 650 grand, they're just selling and they're moving, and they're going to pay 300 or 400 grand, and they'll be 20 minutes into the city. Especially now, most of them are doing a sort of this hybrid model between having to be in the office and work from home. So actually the interest rates going up at the moment from a central London perspective is really good for some of these commuter belts, because people will, I think inevitably a certain percentage of them will be forced to sort of move out of the city. And I think that's really important, again, when you're an overseas investor and you're looking for that value. So yeah, pretty much half the price of a London property and 20 minutes into Paddington, which is just tremendous value. And as you said, from a rental perspective, JLL, they look, sort of potential rise in rents of 12% over the next 4 years. I think they're probably underestimating that personally. I think it's going to be a lot higher. But even if you're looking from an overseas investor perspective, I'm buying a property, I'm 20 minutes from London, I'm going to get a 12% uplift on my rental, and I'm going to get the capital upside, and I've got no developer risk. It's a win-win.
Out of your 4 friends you met, did they know what you do for a job?
They do. We are in conversation for sure.
I hope so. Otherwise, send me their numbers. Have you got another slide after that?
Well, they will be handed over, because I'm not doing any direct sales at the moment, so they'll be handed over to quality IFAs, Chris. So we'll have a chat after.
That's kind of you. There we are. Some pricing. That's what we wanted to see.
Yeah, I just wanted to give you a snapshot, really. Maybe, Paul, you can probably just go through them in a little bit more detail, but it just gives a snapshot. There's 1 2-bed on there. There's most of 1-beds, and there's a mix between short-term lets and rented, and that's the current model that they're on.
So just a bit of background to this as well. So the developer, we've got 40 units exclusively in this project, and the developer held stock back on completion, and they wanted them getting them as tenanted as quick as possible. So they've actually not increased rents in line with what the market's done. So these are the actual rents as of today. But when we did our rental analysis with Pardee, we've got much more interesting numbers on normal long-term lets, i.e. 6 months or more. So the opportunity really, they are tenanted, but we do know that there's upside on these rents as well. And that's normal on the long-term rental market model. So the numbers that you're looking at, the 5.46 is obviously strong. The 4.17, we definitely know that, there's upside there. And the columns on the right as well relate to what we call short-term lets. So there's quite a lot of activity in the UK at the minute around short-term lets. And these do permit short-term lets. So that's worth mentioning as well.
A question has just come in from Karen. Are any untenanted? So if somebody had a client that wanted maybe to use it for themselves or just keep it for certain times of the year, or are they all fully tenanted and you can't do that?
They're all fully tenanted. We've got the end dates for the contracts as well. But as we stand today, they're all fully tenanted under either long-term or short-term rentals. Obviously, the short-term lets, there will be pockets where we can get access for viewings. But if someone wanted to buy to move in themselves, then the long-term tenancies have a 2-month break clause. So they'd have to endure the client or the tenant for 2 months after they complete. But then on the same day they complete, they can issue a termination notice. The tenant would then need 2 months to move out maximum, and then they can take full sort of possession of that unit as well. So yeah, that's how that would work. And the model that you mentioned as well is the same. You referenced the project we have in Greenwich, Chris, and what's been really bizarre there actually, which, you've got £850,000 for a 2-bed. We've sold a lot at 1 million plus. And I think through the 8 that we've sold so far, everyone's been a cash buyer, which has been so interesting for me. So what we've seen at the top end of the market, obviously, is a trophy asset, the Greenwich opportunity, but they've all been cash transactions. And I definitely think here there'll be a lot of mortgages in here, just because mortgages are available, obviously, for 65%, as you mentioned, subject to status. But I think this ticket price does welcome more to people that want to take leverage. And again, as Greg alluded to, the income of the rent offsetting their mortgage costs. So I think the price point's perfect for that. But I was really, astonished to be thinking we sell 8 in Greenwich and all £1 million plus, and they're all cash buyers. I thought it just tells you there's still obviously a lot of cash out there for the right opportunities, which again, Greenwich certainly was.
Greenwich is on our website, Holborn Property Investment. So please have a look. Another question has just come in from Jack. The furniture, does that stay, or is that the tenant's furniture, or how does that work?
There's a mixture. Some come with furniture because the developers put the furniture in, and I think 6 or 7 where they're unfurnished and the tenants put their own furniture in. But again, we've got the list and all the details of that, so we know which units fall into which category. But again, if a client does want to buy and they need furniture packs, then we can offer that service as well.
I think Slough is fantastic. You've obviously got other projects, all are on the website. I'm going to touch on just one more, not to confuse anybody, but you've got Wellingborough, which is a lower price point, which is also completed, also tenanted, not on the website yet, but it is going on. So, a range, that's what it's all about, isn't it? Having a range of opportunities, whether it be purchase price or location. Greenwich is a fantastic opportunity. I think Slough, I mean, those price points, and for all the reasons you've said, I think that's a winner. And obviously, we've still got my favourite, which is the Plough, up there at under 200,000. So you've got a good range of stock there.
Yeah, I guess, Chris, we wanted to be in a position where no matter, what kind of client the IFA brings to us, we're in a position where we can advise them and help and support them. I guess the caveat of that without cheapening the brand too much, because I think there is a certain level of property that you get to, and it's potentially at risk there. But Wellingborough, you mentioned 135 to 215. Most sat around about the 145, 155. Beautiful conversion, 1839 building. Obviously, we've mentioned Slough, we've mentioned the Plough, and then up the higher end into to Greenwich and Manchester, Crown View, which we're obviously launching on Thursday. So, yeah, we're pretty well catered, and then we've even got something special coming up outside the borders of the UK very shortly as well, which I can see Paul smiling about.
Right. Okay. We don't let too much out the bag. That is brilliant. I think that was your last slide. Obviously, details are on our website, Holborn Property Investments. So have a look at that. This webinar will be attached to that as well. If you missed any of it, or you want to see any of the other award-winning shows, then please tick on previous webinars where you can actually see the Plough and Lincoln House being discussed. I look forward to seeing you on Thursday, Greg. Thanks, Paulie, and we'll see you all soon.